Politicians of the African Financial Alliance on Climate Change, ladies and gentlemen, good morning. On behalf of the African Development Bank and its partners under the African Financial Alliance on Climate Change, AFAC, I am pleased to welcome you to this webinar on the development of a sustainable finance taxonomy for Africa. The webinar will discuss the results of our initial consultations with selected financial sector stakeholders on the key building blocks of the taxonomy, including its objectives, intended users, and the sectors it will cover. Our objectives today are to promote awareness of the ongoing taxonomy design and engage a broader range of stakeholders in the process going forward, and to share the initial scoping decisions that have emerged from the consultation and benchmarking process, while also identifying potential barriers to the adoption of the taxonomy. Developing this taxonomy brings us a step closer to achieving the AFAC vision to ensure that financial capital and financial products and services are mobilized to support the Paris Agreement objective of making financial flows compatible with low greenhouse gas emissions and climate resilient development. In this regard, the African Sustainable Finance Taxonomy will offer a transparent voluntary framework for classifying and recognizing sustainable investments, thereby improving accountability and promoting increased participation from financial sector in greening their asset portfolios. With the financial sector's active involvement, we can bridge the gap between the 30 billion Africa receives every year as climate finance and the substantial 277 billion US dollars it needs each year. Let me here stress that the development of the taxonomy is integral to the bank's climate change and green growth strategy 2021-2030, as well as with the African Development Bank's 10-year strategy 2024-2033, which aim to establish an enabling environment for climate actions and green investments among its regional member countries. As part of that climate agenda of the bank, we have committed to devoting 40% of all our project approvals every year climate finance and achieving funding parity for mitigation and adaptation. We have exceeded this target consistently in the past 3 years, reaching 55% of climate finance approvals as part of our project approvals in 2023, and 60% of adaptation funding over the past 3 years. We have achieved this through several innovations, including, but not limited to, 750 million US dollars hybrid capital issues in the global capital markets last year, the first of its kind among multilateral development banks. The hybrid capital note was oversubscribed at 6 billion US dollars. The African Development Bank has also deployed various financing instruments, some of them via partnerships, the latest being the Climate Action Window for 37 low-income African countries under the 16th replenishment of the African Development Fund, ADF, with initial funding of 429 million US dollars from development partners, such as including Germany, the UK, the Netherlands, and the Netherlands. This climate action window will directly support the low-income country and most vulnerable countries in Africa on climate adaptation, mitigation, and technical assistance. Additionally, between 2021 and 2023, the African Development Bank raised about 1.3 billion US dollars in external global climate finance, and in cooperation with the Global Center on Adaptation, we also launched in 2021 a 25 billion US dollar program, Accelerate and Scale Up Climate Adaptation in the continent. Ladies and gentlemen, in closing, I thank the Financial Sector Taxonomy Working Group for their active participation in this process and encourage other interested parties to join the process of shaping Africa's sustainable finance taxonomy. As we move forward with these important initiatives, let us remember that each of us plays a critical role in fostering a resilient, inclusive, and environmentally conscious economy. Together, we can drive meaningful change while unlocking investment that not only spur growth, but also protect our planet for future generations. I look forward to your expert insights as we continue this journey together, paving the way for Africa's financial sector to take the lead in climate action. I thank you. Merci beaucoup.
Thank you, Mr. Dorsuma. So, as mentioned by Mr. Dorsuma, we now give the floor to Madame Sevetelina Blagoeva that will present the taxonomy. Thank you. Sevetelina,
thank you so much as well, and good morning or good afternoon to all participants in this webinar. I have the pleasure to share with you the outputs of the work that has taken place so far on the scoping of the taxonomy of sustainable finance for Africa. And we've prepared for you several segments within this presentation, which will look into different aspects. If we can go to the next slide with the agenda, I'll just briefly outline for you how we'll take you through these different elements. First, following the introduction that we've just received, we're going to look into some of the key elements of defining what is a taxonomy and why it's necessary for Africa. Before explaining what has been the process that has taken place so far on developing the scope of this framework. And then we'll share with you the emerging proposals regarding the scope of the taxonomy. Specifically, we will look into what are the strategic objectives, what are its key users and uses, what kind of sustainability objectives it covers, what is the sectoral focus, and what will be the approach to assessing taxonomy alignment. This will be followed by a Q&A session where we have about 30 minutes to take any questions or comments you have on these emerging proposals, and we'll hear more about the next steps at the end of this webinar. So without further ado, if we can go to the next slide, for this exercise, it's important to make sure that we are all on the same page when it comes to our understanding of what is a taxonomy and what purpose it serves. A sustainable finance taxonomy is a classification system that identifies and defines economic activities, businesses, or projects as sustainable based on a set of criteria or principles in relation to a set of sustainability policy goals and ambitions. So behind this long definition, I can maybe say in more common language that it in a way it's a bit of a dictionary about activities which are considered sustainable based on a commonly agreed definitions of sustainability in the market. At the same time, it's not an exhaustive dictionary in the sense that there can be a variety of activities which are sustainable, but due to a number of reasons, it's not feasible to include into this classification system, or at least not in the beginning. In that sense, the framework aims to really cover those activities which are most relevant, which are most for which a standardized definition or criteria can be identified and applied. And it doesn't, in that sense, aim to capture all relevant activities because that's simply too challenging to put into practice. In addition, it aims to really address what is commonly identified as sustainable, but at the same time, it may not capture all activities which are necessary for sustainable development. So what the emerging market definition for sustainability has been primarily focused on climate, environment, and to some extent social related activities, but it has not covered necessarily activities which are necessary for economic development, which we all know is also important for Africa, but at the same time not falling within this commonly agreed definition of sustainability that we encounter. So I ask you to keep this in mind, and we'll come back to this point a bit later on when we talk about the scope of sustainability objectives we have defined for the taxonomy. As a framework for defining sustainable activities or project, it is a cornerstone for sustainable finance and for investment, but it's not a standalone element. So this is another point that it's important to keep in mind, because again, as a dictionary, it enables users to check whether certain activities are in line with the criteria set, but then it's still up to users to whether to apply those criteria, whether to actually choose investments based on these criteria, and how to disclose compliance with these criteria in their reporting. So in that sense, taxonomy frameworks are a part of the sustainable finance framework, and they interact with other rules or regulations or standards which relate to disclosures, which relate to the definition of sustainable finance products, such as green bonds or social bonds, or the labels which can be applied to investment activities. And as as an element on its own, it's important to remind ourselves that it has a role to play, but it needs to also interact with other elements of the financial system and financial markets to make a difference. So if we go to the next slide, I will also look into one question that you may have had when receiving the invitation for this webinar and hearing about this initiative, which is, why do we actually need a taxonomy for the continent of Africa? Now, this is we've also been discussing this, of course, together with the stakeholders that have been engaged in this exercise so far, and there are several reasons to bring up. First, of course, there are already multiple, in fact, multilateral regional taxonomies worldwide. A lot of you may have heard about the EU taxonomy for sustainable finance, the ASEAN taxonomy. A lot of you are probably from countries where you have national level frameworks in place. There are several African countries which also have their national taxonomy. So indeed, it's a relevant question to ask why we need to have a framework for the continent of Africa as a whole. And having such a continent regional framework provides several distinct advantages. First, it provides the opportunity to establish what are the priority sustainability areas for the continent as a whole, because relying on international frameworks to do so, it doesn't really work in practice, because what is sustainable, for example, for Europe may not necessarily be the most relevant sustainable investment in Africa. So it's important to, while keeping international frameworks or frameworks such as the EU taxonomy, which has been recognized as one of the leading ones in this space, it is important in order to ensure that there is a certain degree of interoperability and consistency. However, in practice, there are also limitations on just using such frameworks when it comes to making investments in Africa, and that's why having an African framework can be of added value. Second, there are, of course, major geographical differences between different African regions and countries. However, there are also a range of common challenges and opportunities when it comes to sustainability. So therefore, having a framework for the continent as a whole is an opportunity to capture those common elements, and not just for African stakeholders, but also for international ones. Having such a continent-wide framework can also be a common reference point for the development of national taxonomies in countries without one. It can be a basis. And for countries which already have a framework in place, it can provide a basis for future updates or expansions. And finally, given that this framework is primarily focused on defining investable sustainable activities, and it targets the financial sector in the first instance, having a regional approach can also reflect the fact that there are ever-increasing flows of capital across borders rather than just within borders. And having such a common definition can facilitate those cross-border flows. So if we can go to the next slide, as mentioned, we are going to be sharing today with you the results of the development process that has taken place so far. And I would like to just say a few words on how we got here. So next slide, please. The process for developing the scope for this taxonomy already started taking place some months ago, and the objective was always to ensure that it's a process that incorporates stakeholder consultations and feedback as much as possible in order to make sure that the framework developed reflects stakeholder expectations and it's of use to them at the end. So to this end, there has been already a series of workshops that have taken place with stakeholders from across the financial industry in Africa, representing banks, insurance companies, pension funds, capital market participants. It's been with a lot of input from members of the AFAC Secretariat, from FSD Africa, and representatives of the African Development Bank. So in fact, there have been 4 workshops that took place so far. We started with a discussion of what are the main ESG challenges and opportunities in Africa that should inform the design of the taxonomy framework. Followed by 3 scoping workshops in which we looked at different elements of the scope of the framework. And the outcomes of those workshops have informed the proposals that you're also going to see today. If we can go to the next slide. When it comes to the propositions for the scope, there are several points to keep in mind. First, scoping is really important in order to make sure that the framework we set out to develop is relevant, targeted, interoperable with other international frameworks to the extent that makes sense, but it's also feasible to design and also to implement in practice. And these elements we have seen as sort of learning points or success factors from other taxonomy frameworks internationally, and we've tried to also incorporate in the proposals for scope that you're going to see now. When we talk about scope, we mean what are going to be the objectives of the framework as an instrument or as an initiative. We talk about how it's going to be used or by whom. The scope also covers the sustainability objectives that will be included in the framework in the first instance or further down the line. What would be the priority sectors for which we'll try to define criteria for contribution to these sustainability objectives, and what would be the process for actually assessing alignment with the criteria. So on all of these elements, you'll see what have been the proposals made on the basis of research into how other taxonomies tackle these aspects, as well as consultations on how to identify what would be the relevant approach to take in Africa. We've had to make some tough choices in terms of what to include, what to focus on, which hasn't been easy. And it does reflect the fact that, again, the taxonomy cannot cover everything. It's not exhaustive. To be successful in terms of implementation, it should be as targeted as possible to make sure that there is enough information, enough attention, enough resources in order to develop, but also to implement. So I'll try to highlight some of the particular elements that inform the choices on these different elements. And again, happy to provide also more information afterwards in the Q&A session. Starting with the first point, which is on strategic objectives. So a strategic objective for taxonomy aims to capture its purpose and the specific contributions it will make to enhancing the sustainability of Africa's economy in this case. When we look at other examples of how strategic objectives are defined for other frameworks in Europe and internationally, we see that there tend to be a lot of common elements to those. So often taxonomies aim to provide a common language for sustainable investment. They also aim to incentivize investment by giving these common definitions of sustainability. And they also aim to prevent greenwashing or increase trust in sustainable investment. They also can be a part of green transition, green transformation in a given country or industry, and to enable the growth or flow of sustainable finance as a whole. So having looked at these examples, if we can go to the next slide, and having consulted stakeholders on what would be the most relevant objectives for the African Sustainable Finance Taxonomy, we've also come up with the 3 priority objectives proposed. Next slide, please. So the 3 objectives proposed are to have the taxonomy serve as a common language for sustainable activities, to channel finance for the implementation of regional and national sustainable policy goals, and to guide the development of financing of sustainable activities, including through sustainable finance products. I'll take them one by one very briefly. So the common language part is meant to capture the ambition that it provides a standardized framework that clearly defines and explains what qualifies as a sustainable activity in the African context. So it's meant to help stakeholders understand and communicate about sustainable investments, sustainable practices consistently and transparently, which is also expected to enhance the credibility of sustainability claims and prevent greenwashing, to promote trust in the sustainable finance market. When it comes to channeling finance for regional and national sustainability policy goals, so this relies on the clear science-based identification of activities or investment projects that would help to achieve Africa's goals in the sustainability arena, in line with Agenda 2063, in line with commitments which are made under NDCs. Achieving this transition will, of course, require achieving these objectives, these sustainability objectives, of course, is also linked to economic growth. It's also linked to the mobilization of capital, both on the public and the private side. And in fact, just to meet the SDGs by 2030, at least $194 billion are required for Africa. So this means that, again, the scope for sustainable investment is immense, and part of this investment can be in line with the taxonomy criteria for sustainability, and the taxonomy can serve as a reference point for some of these activities. Again, not all, because there would be a lot of investments which are necessary for economic growth that would not be classifiable as sustainable under this framework, but a lot of them will be, and our goal will be to capture as many as feasible within the overall constraints we have for this framework. So it would also guide the development and financing of sustainable activities, including through sustainable finance products. What we mean is that it can serve as a reference point for financial instruments such as green bonds, sustainability-linked bonds, or loans. It can serve as a basis for blended finance products which target sustainability, which target sectors or activities which are key for achieving sustainability objectives. So having this common reference point will help ensure consistency, credibility, trust, and ultimately the success of these products. If we go to the next slides, in fact, we have a few more details on how these objectives are going to be put into practice. So when we look at the key users and uses of this framework, some of the main examples of intended uses and users for taxonomy frameworks internationally also refer to these elements of financial products and processes, in particular around disclosure and reporting. So we see, for example, that we have the EU taxonomy, ASEAN taxonomy, both specifically identifying disclosure-related requirements or uses when it comes to the criteria they have put in place. Bond issuance is also another very common application for taxonomy criteria, because and this can work in parallel to the existing guidance or standards available in the market for how to issue green bonds or social bonds, by providing this more fine-tuned set of criteria that can be put in place in order to identify eligible investments. To come up with, so if we go to the next slide, we can also see the proposal for the African taxonomy, and this is also reflecting the examples we see internationally, but also the specific African context. And we identified this prioritization together with workshop participants in several sessions. So the three priority uses and users that have been defined are the following. First, to guide the development of new sustainable finance products, which would be of relevance to financial institutions, investors, and regulators. Also to support sustainability disclosures and reporting by financial institutions, and to implement ESG risk management at the organizational level. So how do these uses work in practice? When it comes to guiding the development of sustainable finance product, as mentioned, the criteria which are set out by the taxonomy can be the basis for product level frameworks when it comes to either debt or equity product offerings, ensuring that investments do go in fact to sustainable activities and reducing the risk of greenwashing. When it comes to supporting disclosures, so as mentioned earlier, the taxonomy on its own is not necessarily a disclosure framework. What it can do is to give the basis for investors primarily, but also to companies about how to identify the activities within their portfolio or within their offering that are in line with the taxonomy criteria and can thus be categorized as sustainable activities or sustainable investments. So we see that, again, this is a use that has been defined for a lot of the frameworks internationally, and it is a very robust way for ensuring that there is consistent interpretation and ability to compare the disclosures of different entities and really see which actors in the financial sector are putting their money behind their commitments and actually walking the walk when it comes to sustainable investment beyond just having that at the level of strategies or commitments. When it comes to implementing ESG risk management at the organizational level, so one element of taxonomies that we are going to talk about later is the do no significant harm principle, which basically requires organizations to assess and mitigate potential adverse impacts across all sustainability dimensions covered by the taxonomy for any activities that are in line with these objectives. What it means is that if you have an investment which is prioritizing, say, climate adaptation, it's still carried out in a way that doesn't have any adverse impact on biodiversity or any social elements. And the fact that we have this risk-based approach next to the impact-based approach of the taxonomy can help enhance overall ESG risk management. So if we can go to the next slide, we come to the third element of scope that we wanted to draw your attention to, and this is sustainability objectives. So sustainability objectives are the thematic areas to which taxonomy-aligned activities should contribute. Again, when it comes to sustainability objectives, we have the examples of other taxonomy frameworks internationally, and what we see is that the vast majority of them focus on sustainability objectives within the climate and environment space. So these sustainability objectives most commonly encountered are those of climate change and mitigation, climate change adaptation, water and marine resources, circular economy, biodiversity and ecosystems, pollution management, and then in very few examples, we also see attempts to also define sustainability objectives under the social domain, which have to do with education, social services, or livable habitats, access to services, and the likes. Again, this focus on environmental and climate objectives reflects also what have been some of the major commitments globally under the Paris Agreement and other international treaties to ensure global progress in addressing risks and in improving overall performance. They do reflect as well some of the major challenges faced by the developed economies that have often taken the lead in developing such frameworks. So again, when it comes to sustainability objectives, it's important to ensure we choose the ones that would be of most relevance to the geography in question. And that's why when we come to the next slide for the African taxonomy of sustainable finance, we have in fact gone beyond the focus on environmental objectives, which we see in other frameworks. So one of the ambitions for this framework was we can stay on the next slide, thank you. One of the ambitions for the framework in particular was to explore what are the objectives that can be defined in the social domain, considering the fact that social risks and impacts are of really high importance and relevance for the continent as a whole. And there needs to be a balance in that sense between ambitions which are set out on the climate and environmental space and the social one. So this would be one of the innovative elements of this framework, this attempt to define criteria in the social domain, specifically for the objectives of incomes, jobs, and decent work, and modern and livable habitats and basic quality services, addressing the particular challenges faced by African countries. When it came to sustainability objectives, this was one of the most challenging parts of the discussions with stakeholders that have taken place to date, because it's very difficult to make a choice in terms of which objectives, in fact, to prioritize, given that all objectives are important to a certain and actually to a very high level. So we really made a lot of effort here to try to identify what could be a phased approach as well to covering such objectives as part of this framework. What we have seen in other taxonomies internationally is that in a first version of such frameworks, of taxonomy frameworks, you often focus on a more narrow set of sustainability objectives and progressively expand those over time. And the reason for this is, I mentioned earlier, it's really based on feasibility. On one hand, the resources it takes to develop criteria for such objectives for the sectors in focus are substantial, and they require a lot of input from stakeholders, which means that from a development perspective, there are capacity constraints that need to be taken into account, and it makes sense to take a phased approach, to adopt a phased approach, meaning to focus on a small number of objectives in the first instance and then progressively go towards more. So with that in mind, and also to mention that there are as well constraints on the implementation side, meaning once we develop this framework for stakeholders, it would be also highly challenging to start directly working with a huge number of sustainability objectives at the same time. And that's why a narrow set in the beginning can serve as a way to get users acquainted with the approach before additional objectives and criteria are brought into the picture. So with that in mind, the ambition was to identify 4 sustainability objectives for the first version, and the proposal made is to focus on 2 on the environmental side and 2 on the social side. On the environmental side, the objectives that were prioritized through consultations with stakeholders were those of climate change adaptation and climate change mitigation. Climate change adaptation, of course, it's extremely important for African countries. Adaptation can take different shapes and forms depending on the specific geographical context, but it was unanimously agreed pretty much that this is one of the key continental challenges, and it would be extremely important to make sure we have defined what are the activities under climate change adaptation that can fall under this framework in the first instance. Climate change mitigation was also considered very important, primarily from the point of view that it will include a lot of the activities or investment projects that would be necessary for the continued economic development of Africa. So this is to say a lot of the activities which are around renewable energy, for example, capacities and related, would be those that are necessary to make sure that the continued economic growth of Africa is done in a climate smart way, in a way that is geared for the future, rather than relying on technologies or methods which are generating high volumes of greenhouse gas emissions and therefore not suitable for the continued sustainable development of the continent. On the social side, incomes, jobs, and decent work was identified as an objective that can address a lot of the challenges faced by countries across the continent when it comes to ensuring that there is relevant education, that there are labor rights being enforced, and to do so within those sectors which would be key for sustainable development going forward. Modern livable habitats and basic quality services is meant to capture those activities which would be key to ensure that there is access to utility services, that urban development happens in a sustainable way going forward. So as mentioned, this was quite challenging to narrow down the list to these four. Again, this is not an exhaustive list. It's just the list that is suggested to go into the first version of the document. But further down the line, the ambition is to also look at objectives such as those related to water resources, circular economy, and others, and to look for also further social objectives that can be included. The next part of the scope is that of sectors, and here I'm going to invite my colleague Louis Théophile to take you through the approach that was taken for defining the list of sectors to focus on in the first instance. Louis Théophile, over to you.
Thank you, Tsetelina. So, as was mentioned earlier, it is not realistic for the taxonomy to cover all sectors of the economy. And in the beginning of deploying a taxonomy, having too many sectors can actually be a disadvantage, making it too heavy for new users to start working with. So this being said, it's important to select the first sectors to be included in the taxonomy with a specific objective. The one we have discussed mainly with the participants was high materiality, both for the economy, but also in terms of impact, sustainability impacts, which relate to the sustainability objectives that were presented earlier. Another thing at the beginning of implementing a taxonomy is that the sectors that are included first should be strategic in the sense that they should correspond to specific activities that are workable by the users. The idea is that in the beginning, the taxonomy should also be designed to be used progressively by more and more users, instead of making it very extensive from the beginning, which would be burdensome for most users. So if we look at other taxonomies, we see some commonalities. For instance, energy, construction, manufacturing, water, and waste, as well as transportation. In some cases, agriculture. No, we can stay just a few more seconds on the previous slide, please. Thanks. Agriculture is included in some taxonomies, not all of them. And the EU taxonomy is often considered as the most extensive, as on top of the sectors that I mentioned, it includes some other elements such as accommodation, so more on the tourism side, disaster risk management, education to a certain extent, services, etc. Next slide, please. So as part of the scoping exercise, we first started reviewing the other taxonomies, like the two examples shown in the previous slides, and also other frameworks. This was done because when it comes to social objectives, most taxonomies that exist currently do not provide many examples of activities intended to contribute to social objectives. So we did look at, for instance, undergoing work in the EU towards a social taxonomy, which it doesn't exist yet. We also looked at social bonds and what are the kind of activities that are included in those. Third aspect that was taken into account are the long-term ambitions and opportunities for the continent, mostly based on Africa's 2063 agenda. And lastly, to inform the decision and mainly to assess the materiality of activities, both in terms of economy, but also in terms of sustainability impact. We reviewed different data points, for instance, when it comes to current and projected greenhouse gas emissions, in terms of urban growth, etc., etc. So as a result of this process, the 5 sectors that were proposed for the first version of the taxonomy are agriculture, construction and building, energy, manufacturing, and transport. So again, and in the same way that then we selected 4 sustainability objectives, the number of sectors here is limited to 5 because we need to start somewhere, hence those are a top priority, but expanding the taxonomy from the beginning with more sectors might not be very feasible, realistic, or user-friendly. Next slide, please. This is the 5th building block of the taxonomy, and I must say not the least. Once we have the dictionary, it's important to actually define the process that is going to be used to assess whether an activity is taxonomy aligned or not. So there are different steps, key elements, structures that are possible and that exist around taxonomies with significant common points. So if we take, for instance, the ASEAN taxonomy, which is actually 2 taxonomies in one, you have either one taxonomy that is sector agnostic with general sustainability questions that apply to any activity, or you have also another taxonomy which is activity specific, which includes questions, criteria that depends on each activity, with the objective to demonstrate that an activity has a substantial contribution to one of the considered sustainability objective. As mentioned earlier, there's a second layer that is added to this substantial contribution, which is the do no significant harm principle, which is a recurring point across most taxonomies. The aim of this principle is to ensure that on top of contributing substantially to one of the objectives, there's no significant harm that is caused to the other. So I think Tsutelina mentioned a very good example. Adaptation activities should not harm biodiversity protection or also social objectives. Lastly, there's a last verification that needs to be taken, which is minimum social safeguards. The reason why this is here is because most taxonomies that currently exist focus on environmental sustainability, but it was recognized that there was a need to verify that minimum safeguards or minimum standards when it comes to social aspects, for instance, human rights, working conditions, etc., were taken into account and respected. Next slide, please. So by reviewing the different building blocks for this process and with the participants through the workshops, different propositions are summarized here for the African taxonomy. The first one would be to approach the taxonomy with activity-specific qualitative criteria. So there are 2 things that are important here. First, the activity-specific parts. So as I said earlier, some taxonomies are not activity-specific, and in that sense, they're fairly generic, and that somehow makes it easier to use, but at the same time, they do lack precision in the identification of concrete and specific sustainable investments. So that's why the activity-specific parts was desirable. the qualitative criteria part is somehow the middle ground between what would be a list-based taxonomy, so just identifying an activity within a list, and another one which is the quantitative criteria-based taxonomy. So for instance, specifying thresholds for greenhouse gas emissions or for certain pollutants depending on the activity that is being considered. The list-based taxonomy is fairly easy to use and to develop, but it lacks in robustness and doesn't offer as much safeguards in terms of sustainability as a criteria-based taxonomy. On the other hand, the quantitative criteria-based taxonomy can be burdensome for users, and considering some existing challenges in terms of data availability or also capacity when it comes to collecting, treating, and consolidating sustainability-related data, it was considered preferable to start first with qualitative criteria, which actually was the approach taken by the ASEAN taxonomy, starting first with a qualitative approach and gradually expanding with more quantitative criteria in the future. The second aspect is substantial contribution. So this one is really the core of the taxonomy. So obviously the point will be to demonstrate that one activity contributes to one of the sustainability objectives that were mentioned before. So either the two climate ones or the two social ones that were presented. The do no significant harm criteria is part of the proposition as well. The point being that sustainability is complex and multidimensional, so it is not possible to pursue one objective without considering the others. And in that way, the DNSH criteria offers some safeguards and enhances the overall consistency of the taxonomy. The risk otherwise, without this second layer, the do no significant harm, would be that the taxonomy and the identified sustainable activities could be called out for greenwashing in the case they have some negative impacts on other sustainability aspects. However, from the experience of other taxonomies, and I think of the EU taxonomy in particular, this DNSH criteria can be challenging for users because it requires to collect more information and to verify different aspects. So that's why we are adding another part in this DNSH criteria, which would be potentially allowing for partial taxonomy alignment. That is something that exists in some taxonomies, the ASEAN one, for instance. And the idea would be that whereas an activity might have some impacts in the present, if it is accompanied by a credible plan to actually mitigate this impact, then it should not be considered as rejected. It should be considered as work in progress or orange if we scale things from green to red, somewhere in the middle. Social safeguards are another element that participants deemed relevant to include. And there are several frameworks that can be referred to when it comes to those social safeguards. And lastly, it was discussed throughout the last workshops that the taxonomy should keep the door open for the inclusion of so-called transitional activities. So by transitional activities, we mean activities that are useful in the midterm as intermediate steps. And this is relevant for specific sectors that are facing significant challenges, in particular when it comes to decarbonization. So one can think of sectors such as cement industry or steel, and in some cases transport. And the point is that having too high expectations might be counterproductive for those sectors. And so it would be relevant for the taxonomy to include some intermediate steps to gradually improve the sustainability performance of these sectors. However, when doing this, it is important to do it in a fully transparent and robust way. So for instance, it would be important that those transitional activities are still better than industry average and that they do not lead to carbon lock-in effects, as in the end, they are just intermediate steps, so they should not have a negative impact in the long run. Next slide, please. Last point to discuss in this presentation is taxonomy governance. So as we said in the beginning, a taxonomy is a dictionary. Once we have a dictionary, it is not sufficient to put it on the table and let people use it as they wish. If we want the taxonomy to live on, to be updated based on emerging needs, emerging ambitions, but also potentially based on feedback from users, it is important to define a governance structure to promote the use of the taxonomy, to collect users' feedback, and to organize taxonomy maintenance and updates. So today, at this stage, this topic is still remaining open. We have reviewed several examples from other taxonomies. One key observation across examples is that it is important to define one body or organization that has ownership for the taxonomy. So by ownership, we mean it's the organization that is in charge of overseeing the taxonomy deployments, the organization of future development stages, etc. So in the case of the ASEAN taxonomy, there's the so-called ASEAN Taxonomy Board, which gathers a variety of stakeholders, so governmental institutions, central banks, financial sector authorities, and stock exchanges. And I think the ASEAN taxonomy example is quite relevant as part of the projects here, as it's an example of another regional taxonomy. So in the end, the implementation is meant to happen at national level. So it would be important also to find the way to connect this ownership, this taxonomy board, to national level, mainly to ministries of finance and market authorities, as was done in the case of the ASEAN taxonomy. And lastly, it would be also important to define who would be in charge of doing the actual updates and pursuing the technical development of new activities and new criteria to gradually expand the taxonomy. And I guess that's it for this section. Next part is the Q&A session. So the floor is to Marina, if I'm
Yes.
correct.
Thank you very much, Litophil, and thank you, Svetlina, for the very insightful presentation. So good morning or good afternoon, everyone again. I'm Marina Finken, the Partnership Coordinator for Making Finance Work for Africa, and I'm happy to be the Master of Ceremony for the Q&A session. One of the points which often raised from the presentation we just heard is the importance of this taxonomy to be adapted and work effectively for Africa. So this part is very important because this is why we also organize this webinar to raise awareness on this ongoing work and also to get additional feedback. So if you can move to the next slide, please, Matsili. So I just want to present you have a poll. You have the QR code and the link. If you can access, it's a very quick questions for you to get to share feedback on the scope of the taxonomy you just heard, and with close questions. So I will ask you please to follow the link or the QR code to answer very quickly this poll. So we have several questions in the Q&A button. So we are going to start with it. It is our preferred way because there are more than 250 persons connected today. If we have time, we will also open the floor for participants to also share lively the questions. So we have several questions. I try to kind of organize them around the theme that we just heard. So we want to hear from you on a few things, on the rationale behind the proposition, if there are some specific aspect of the taxonomy you want to learn more about, and if you have any factors to identify at this stage. So some of the question, we have several questions around the interaction of this Pan-African taxonomy and the existing taxonomy already in Africa, because you mentioned several examples, the Rwanda one, the Wenu one, etc. So we have some question on the interaction between this Pan-African taxonomy which we just presented the scope, and this existing taxonomy. I think that you already mentioned it, Vitalina, but if you can share more insight on this. So I will read some of the questions around this topic. First one, what is the purpose of a Pan-African taxonomy? Is it intended to provide guidance to African member states, or does it override existing national green taxonomy on the African continent? And the second question on the same topic, what will be the relationship connection between proposed continental taxonomy and the Western Africa sub-region one and independent country taxonomy like Ghana, etc.? So that will be the first question. If you can give more details on the interaction between this work and the existing taxonomy and maybe upcoming ones.
Thank you, Marina, and thank you to the audience for this question as well. So this is one area which, of course, still remains open for fine-tuning. However, the preliminary hypothesis amongst the working group on this framework has been that it will, in the first instance, work in parallel to such frameworks where it makes sense. So you have several scenarios, right? There are some countries which have already a taxonomy framework. We've reviewed, in fact, I believe most examples within Africa, which were available by the end of last year when we carried out this research, and we saw that a lot of them, for example, take as a reference point the EU taxonomy. We have also the example from the WAMU region, which is more of a list-based approach. So I see the interaction between those and the African taxonomy framework, the continental one, in a way that where there is a national taxonomy or regional taxonomy in place, of course, stakeholders can follow that. However, these frameworks are also not set in stone. In fact, the majority, as mentioned earlier, only focus on climate and environmental objectives, and, for example, don't take into account social ones. So it could be that in their next iterations, they also follow the references set out by the continental one, to expand their sustainability objectives into those areas. For countries where there is no taxonomy in place yet, financial sector participants or companies can then refer directly to the criteria set out by the Pan-African taxonomy. So I think this is the approach that you see also in some other regional initiatives. Again, there is of course, it would be desirable to have some kind of consolidation and consistency, but at the same time, national taxonomies may also capture some country-specific or region-specific elements that may not be in place under the regional taxonomy. So ultimately, it's also for stakeholders to define what is the most relevant reference point for them to use in their investment or disclosure activities. But I do believe that a certain level of common approach would already be present by design, because again, we have taken into account the approach from these existing initiatives, so that we are not proposing something that would be drastically different for those elements that are commonly covered in all rather. I hope this answers the question, but again, if there are further details, please post a follow-up comment and we'll look into it.
Thank you. We have also several questions around the sectors. So the scoping proposed 5 sectors, and as Phil mentioned, this is a start because from resources constraint, we have to limit ourselves to 5 sectors, and but we can gradually add new sectors. Nevertheless, we have many questions around it. The importance of the mining sectors came very often in the questions from the participants. We also have questions around the social sectors. Given the focus on social impact, we will have expected social sectors to be considered, example, education, health, etc. The sector choice appear mitigation strong and adaptation is priority for Africa. We also have always on the topic of the sectors. So we have the importance of mining sector first. We have some participants who have expected to see more social sectors. And we also have comments or questions around the importance of the economic aspect. Taxonomies must be viewed from a perspective informed by economics, especially in Africa, considering assets and liability, actual and interest costs, external expense, etc. As an advocate consultant for taxonomy, will you be considering the economic aspect later? So to summarize various questions around the sectors, importance of mining, should we have should we increase the importance of social related sectors, and also the economic aspect of the taxonomy? So will you have some comments on that?
Yeah, of course. So, I mean, maybe starting with the broader question about how we took the economic aspects into account, I would say that this was indeed one of the key discussion points raised in the different workshops with stakeholders to date. Because again, the economic development, economic growth challenges in front of the continent of Africa are immense, and it's a valid question to ask how a taxonomy fits into those. So here, and this is also part of the considerations around which sectors to prioritize for inclusion. Again, the taxonomy is not an exhaustive framework for what is sustainable or what can be considered sustainable. It does aim to capture what is commonly accepted as being sustainable, but that by default will exclude a lot of activities which are actually key for economic growth. You would need to build roads. You may need to still build new facilities which have high amounts of greenhouse gas emissions from their activities or from the construction process. There is always going to be a lot of activities that need to take place in order to generate economic growth, but which by virtue of their environmental footprint cannot qualify as sustainable. Therefore, it's really important. This was really a kind of this was one of the main guiding principles as well when it came to identifying which sectors to prioritize in the first instance, trying to look into those which are most relevant for accelerating sustainable growth in the economy or for the economies across the continent, while not necessarily capturing all the investments that would need to take place. This is the case everywhere around the world. There are certain elements we are trying to capture under the transition finance part of the framework, but again, that would not that wouldn't be enough to capture all investments that need to take place going forward for the development of the continent. So again, when it came to sectors, we had to be quite selective and really focus on sectors which are also most investable for the financial sector. So it's there are, again, a number of investments which need to take place by governments, for example, or which companies need to do with their internal resources. And then there are investments on which for which we'll count on banks or funds, private investors more broadly to be generating the resources. So we've also tried to look for those sectors which would include the biggest amount of investable sustainable activities under the priority objectives. And that's how we came up with the selection that would go into the first version. But again, the ambition is that this would be expanded going forward and can include further sectors that would include a substantial number of activities that can be considered as substantially contributing to the sustainable objectives in question. I think, Marina, that covers all of the elements that you combined from those different questions from the audience. Was there anything I missed?
Oh, I think it answered the question. Thank you very much. So if we move to another part of the scoping report around the strategic objective of the taxonomy, because we also have few questions around it. Especially two. First one, out of climate change is a major challenge. It does not cover all environmental issues and challenges. Biodiversity is a key one, for example. How and why does climate change objective have been considered here? And the second question also related to the objective of the taxonomy. I will read it. It will also be great to think how the proposed taxonomy has addressed the transition versus just transition for those activities who will not necessarily qualify under the green criteria. Will it be possible for the taxonomy to cover that? And another question still related to the objective, we have one question asking if it will be possible to also develop a taxonomy for unsustainable activities to be embedded within the larger document, which will include the list of activities that will be considered harmful to the environment or society and are not in line with the Sustainable Development Pathway. So those are three questions, around the objective and some of the feedback from the audience around this part of the scoping report.
Thanks, Marina. I picked up the first and the last. I'll ask you to afterwards remind me for the second part, but I'll start with the last point about taxonomy of unsustainable activities. I think that's an interesting proposition. I don't think so far it's something that we have considered doing because again, it's the approach taken by other taxonomies internationally has been mostly around selecting those activities for which there is a common understanding that they are sustainable. For those that are unsustainable, I suppose it's a bit more of a gray area because depending on who you ask, they may have a very different view on what are those. And it is important to, there can be a sort of red list of exclusions, which perhaps we can consider. But again, it needs to be quite narrow because it is important to ensure that as many users as possible can identify activities that they do consider sustainable, that they can classify as sustainable under this framework. And this maybe I think the second question was on transition, and this also links to the point about how to whether to consider transition activities as covered in this taxonomy. And indeed, we have looked as well as what are the other examples or approaches taken by taxonomy frameworks in Europe and Asia and elsewhere. And here, again, we will have to be quite careful in terms of where to draw the balance between what are the criteria we define for acceptable when it comes to transition activities, because it's really important to also avoid or to minimize as much as possible the risk of greenwashing and to call green or transitional activities which are clearly not set up with an intention to actually move away from activities that are harmful to the environment in particular. So there is an ambition to include the transition elements to the extent possible, and this. I think this will also be one of the more challenging parts of the work that's still ahead of us. As part of the next steps, which are around defining the sectoral eligibility criteria, we will also need to have those key discussions around what should be part of transitional activities under the different sectors and sustainability criteria. So again, we will also count on input from the stakeholders in order to guide the proposals around those elements and make sure we have captured what is relevant, but also what is credible as transitional when it comes to the African context. And then the first point was around why biodiversity was not in the first selection, and it was really due to just capacity constraints. I fully agree, biodiversity is absolutely key. However, it was simply in the first version, we only have this scope for including 4 sustainability objectives, and ultimately feedback from stakeholders guided us towards including the climate adaptation and climate mitigation ones. But I also hope that in the very next update or expansion of the scope, biodiversity would be right at the top, given its importance for the continent as a whole.
If I may add on this, Svetlina, indeed, the biodiversity objective is one of the objectives that has been discussed because it exists in several taxonomies, like the EU one, the Asian one. However, most taxonomies have started with climate and gradually expanded to then add more objectives. So although it's of uttermost importance, it's frequent that biodiversity has been added gradually and progressively. And there might be a reason to this, which is that when it comes to defining criteria for contributions to biodiversity, the complexity of those criteria tends to be significantly higher than when it comes to climate. Climate, to put it simply, it's about greenhouse gas emissions. It's about measuring greenhouse gas emissions. Biodiversity, it's contexts, location specific. So that's why starting with biodiversity might also scare away some potential users. So that was part of the elements discussed. And in any case, as we said before, the 4 objectives that were proposed are not excluding others for future development stages.
Thank you. So I will maybe just read one comment. You don't necessarily need to answer that, but coming back to the sector, because this is also something which is often coming from the question around the social aspect. So in the scoping report, you mentioned that you try to give equal balance between environmental and social, but we have many comments on that. I will just read that one, and then I will maybe open the floor to some of the participants to ask the question on live. So we have a comment here: Africa's greatest need, historical and future, is social. Why did you not focus on developing a social taxonomy for Africa first? Our priority was first and foremost climate, then nature, with social last, which is understandable given the very and highest level of UN SDG development. Social followed by nature, and last climate should be the priority for Africa over the short and medium term. Just want to read that comment, and because we also have many questions around the importance given to the social aspect of the taxonomy. I will now ask maybe some of the participants have the hand raised for a while. I will also maybe invite them to ask the question or give the comment on live. My request will be to make it as much as concise as possible, because we don't have much time, and we are mainly connected on the call today. So I will ask Mr. Christopher Kibiru maybe to unmute himself and ask his question, please. Mr. Kibiru, you are still on mute. Hello?
Hello, please. Sorry for that. I had a problem with my net.
Yes, we can hear you. Go ahead and ask your question or share your comment, please.
No, I was asking on this development regarding the taxonomy. I have attended other government or other development partners like IFAC, and we have seen them also develop a taxonomy. I was asking, is this taxonomy still aligned with the one for the IFAC, or this is a totally different taxonomy? Are we preparing one for all maybe development partners, or it's something that is totally different? Thank you.
Okay, I believe we already addressed this question. Is also related to the interaction between this Pan-African taxonomy framework and the existing taxonomy. So I don't know if you have any new additional comments on that, Vitalina, but I think we kind of addressed this question at the beginning of the Q&A.
Maybe I can tie it into the comment that you read out earlier about why I focus on climate, for example, rather than more so on environment or nature. And this also links up to the question just now. So one of the topics we've discussed a lot with stakeholders is that of interoperability. So interoperability refers to the notion that different frameworks should still be able to sort of speak to each other, to have some common elements, whether in terms of structure or content, that enable users who need to interact with these different frameworks to understand how what are the common elements and how they can and how the different frameworks are consistent in a way with each other. So interoperability is desirable because it does facilitate users' experience when it comes to this proliferation of different taxonomy frameworks, or not just taxonomy, but also there can be other frameworks, whether on the disclosure space or when it comes to ESG risk management, etc., that ideally would be as consistent as possible, so that when you as a financial institution are faced with a choice of which framework to apply or how to resolve or how to work out what are the requirements, similarities or differences between these frameworks, you can do so with as minimal effort as possible. So in a way, this also puts a constraint when it comes to designing a framework for Africa, because yes, on one hand, you want to make something that is as tailored as possible to the continental context. On the other hand, you still want to make something that is recognizable to especially international investors, when it comes to the other frameworks that they're already used to or familiar with. So again, this is one of the elements which we need to find a good balance for, because it is going to be important to address both the desire to have something tailored and relevant to the African context, as well as the desire to have a framework that nevertheless remains relevant for users both within the continent, but also outside of continent, who already have to apply or comply with other international frameworks or standards. So I cannot answer why not a social taxonomy on its own, but as long as the scope is sustainable taxonomy, then it also needs to reflect the experience and sort of market expectations that have been set out around the balance between different climate and environmental topics. And again, the innovative element here is that we're bringing social elements already to be at the same level as environmental and climate ones, which you don't see much elsewhere. So our challenge would be to figure out how to put this into practice and keep it useful for both financial institutions in Africa as well as outside.
Thank you. We have also a question for Ben April in the chat, and I can see that he also has his hands up. So, Mr. Ben April, you can ask your question. I can see that the question in the chat is related to the interoperability and enforceability of the taxonomy issue, which Vetelina just commented on. So I don't know if you have a question, additional question besides that topic. If yes, please, you can unmute yourself and ask your question or share your feedback.
Thank you. It's Ben April. Can you hear me?
Yes, we can hear you.
Yes. My question relates to I'm just coming from, because I'm coming from South Africa, and I'll just make an example. We have the South African Sustainable Finance Taxonomy, and this is the taxonomy that we are locally using for reporting. This is enforced by our regulator, and this is also applicable to our banks that invest across Africa, just like our largest banks that operate across a lot of these countries. What we've also seen happening, particularly in the largest markets, is that we know that with the World Bank and FST, there's at least 15 other countries that are in the final stages of developing the taxonomy or nearly finalization of that. I'll just make an example: Kenya, Mauritius, and all of those. And all of them are following different approaches in terms of how they're doing this taxonomy. In South Africa, we had the taxonomy of adopt and adapt. And we also had, although we had the taxonomy, it has not really led to a significant increase in sustainable financing, due to the fact that although we had the taxonomy, most, like 99% of the sustainable finance that even floating had to be government. It's basically what was issued as government subsidy. And even funding that we obtained, that 8.5 billion at last COP26, did not make anything, because more than 99% of that funding is not being utilized, because it didn't change the cost of the funding. It actually increased it. But the fact that I'm coming to is that the enforceability, because now you operate across different African countries, they all have their own taxonomy. You will have the AFD African taxonomy. From a regulatory perspective, in that country, it is not enforceable. It may be good from an AFD perspective, but if you operate within that taxonomy, you have to adhere to the laws and regulations of that particular country. Rwanda has that taxonomy, you have to adhere to that taxonomy. Within South Africa, you have to adhere to their taxonomy. But maybe if you want, I just wanted to understand what is the practicality, enforceability, and just relevance, because the enforceability and applicability for this across the African continent within the different jurisdictions will be substantially different, because local regulations and laws take precedence. And maybe for obtaining funding from an AFD, that's probably where it's going to be applicable. But I'm just talking from a South African perspective. That's going to be, and I'm sure from the largest economy like Egypt also developing, already having a taxonomy, that will be minuscule. But I think it's where it's probably more applicable, because even across Africa, you have the level of social development is vastly different in terms of GDP per capita. Africa, I mean, just about 4 or 5 countries account for more than half of the GDP of Africa. So these ones have already decided to do their own taxonomies. And maybe the African taxonomy probably will more be applicable to smaller countries with lower levels of GDP, and that doesn't have the finance or the capability to enforce taxonomies within their own jurisdiction, or just being too costly. Thanks.
Thank you. Thank you very much, Ben Fetelina. Before letting you answer to that, I just want to maybe add additional question we had in the Q&A button, also related to the implementation in the of these taxonomies. And we have some questions regarding how easy and it will be possible for developing country to implement taxonomy principles into a small cost and a very valid to current generation in future. And still on this topic, we have some questions around the challenges that you may have been encountering while working on this Pan-African taxonomy in terms of regulatory framework, the informal sector, and also still on the implementation, if we are considering some capacity building plan. I think this question is more for AFAC, the AFAC secretariat. If there are some capacity building plan for regulator, financial institution, or other to facilitate the implementation of taxonomy. Just also want to take the opportunity to include this question, all related, if I understand well, to the implementation of the taxonomy at the national level. So I will let you comment on that, and then I think it will be our last question because we are running out of time. And I will also maybe let David, I just see that he has his hand, or maybe he wants to comment on some of the questions. But first, the floor is yours, Vitalina. Thank you.
Maybe I invite actually David to first address his points, and then I'll complement for anything that remains.
Sure. David, the floor is yours.
Good afternoon, everyone, and thanks for joining the webinar. Thanks to Vitalina and Marina. I think I wanted to address what I think is a recurring question around the applicability of this taxonomy. And it's something that we've discussed a lot in the working groups. I think first thing we need to be absolutely clear about is this isn't about developing a taxonomy for AFDB financing, right? That's not what we are trying to do. What we are trying to do is to develop a taxonomy for use by the African financial sector. And that is why the consultative workshops that we have done over the past few months have all been with representatives of the African financial sector. It has not been an AFDB process. I think, Ben, you raise very valid points about, the applicability of this taxonomy when regulation is local. And I think this speaks to two things. First of all, it speaks to the intentions, and there was a question in the Q&A as to whether we are trying to provide, as to whether this taxonomy will override national, existing taxonomies, whether they be national or regional, or whether it would be to provide a framework. And I think what we are trying to do really is to provide a framework, right, for African sector stakeholders who are thinking about developing a taxonomy. So that's what we are trying to do, rather than saying that this would this would override or replace national legislation or existing taxonomies. I think as the PwC team made clear in their presentation, one of the issues that we still need to do some thinking about is the governance of this taxonomy, and governance in terms of sort of, how do we update it? What are the things that need to be added? So I think all these issues are interrelated, but I just wanted really to make the most important point. If you don't remember, I just want you to remember two things from everything that I've said. One, it's not about creating a taxonomy for AFDB financing. That's not what it's about. And two, it's not about supplanting or overriding existing taxonomies or national legislation. Thank you.
Thank you, David. Svetlana or Littlefeet, did you have any additional comments on that?
I think we addressed technically the question about what have been the main challenges as well as part of the other responses shared. So maybe in the interest of time, I won't go over these again, and we can instead go towards the closing words and next steps.
Okay, sure. Thank you. Just a quick reminder for the last minutes about the poll. You have the link on the screen. We also share it in the chat. If you haven't done yet, please go and answer the very quick question. And then we will then stay with you, David, for the closing remark. I think many participants are very curious about the next step, which you will give more details on. So the floor is yours. Thank you again for the very relevant questions. David, up to you.
Thanks, Marina. And let me begin by thanking our participants for being actively engaged throughout the webinar. We've had I've been keeping an eye on the number of participants, and we haven't fallen below 200. So it speaks not only to the relevance of what we are doing, and we thank you for that engagement. If I can have the next slide, please. In terms of next steps, as Alhamdu said in his opening remarks, we've been doing this work. We've been working on this taxonomy for a few months now. What we've given you today is a brief presentation of the scoping report. We are open to sharing the full draft scoping report for comments by 6th February, as you see on your screen. If you would like a copy of the full report or to share it to comment, or if you would like to be more formally engaged in the process going forward, please shoot us an email at the address on the screen. I think it's actually afac_secretariat@afdb.org. And in terms of next steps, we are open to receiving comments on the scoping report between now and 6th February. So that's a period of about 2 weeks. We will then sort of go through the comments and revise the report as needed. After that, we will now move into the next stage of the development process, where we are going to be doing sectoral workshops, and you can see the sectors there. And so if you are interested in participating or would like to get involved in any of the sectoral workshops, please give us a shout via the same email, afac_secretariat@afdb.org, and we will get back to you. I think it just remains for me to thank you all. Many thanks to the PwC team. We spend quite a lot of time together virtually these days, but no, thank you for all the work so far. Thank you for the presentation. And most of all, thank you to all our participants. I think at the high point we had over 270. And we all know how busy you are, but as I say, we are very open, very willing to engage. So just shoot us an email. Some people already indicated their interest in the chat, and we have responded to them. So we will be in touch with them, but feel free to reach out as needed. Finally, on logistics, just to confirm, because again, there were a few questions in the chat. Everybody who registered for the webinar will receive a recording of the webinar and the presentation deck within 3 days, simply because that's sort of the time that it takes us to download everything from Zoom. So thank you very much and enjoy the rest of your day, and hope to see you soon. Thank you. Bye-bye.
Thank you.
Thank you. Thank you all. And thank you again on behalf of Making Finance Work for Africa. Just a quick word where my colleague put in the chat our upcoming webinar around the natural resource and capital and the relevance for the financial sector, kind of linked to the subject. So we hope we will see many of you there too. Thank you. Have a nice day. Take care. And Happy New Year again, by the way.